Hi folks, Scott here, and this is the wrap for Wednesday, July 3rd. So let's talk about what Friday may bring us. Tomorrow's July 4th. The markets are closed, but the markets are open on Friday. Now today was a half day, and I'll talk about that more in a moment. But what was interesting to me, and a lot of this information, factors that I will consider on Friday, such as, and our members consider, such as it being the 5th, which is a unique day that'll show up in the worksheet. The fact is monthly jobs report, all important day, that'll be in the worksheet. So a lot of the core factors will be considered, but one sort of nuance, one definite nuance, but it caught my eye, was the following. If you look on a cash index, which is what I use for the S&P 500, the INX, it actually closed at a 10-day high. Now barely, it closed at 1615.41. But you'll notice that today's highs, while it had a closing high, 10-day closing high, it did not have a 10-day high. So I thought it'd be interesting to show you the results of fading gaps when you've had a 10-day high close, but not a 10-day high. And this is any market condition, because it's pretty rare actually. Let me get back to back testing tool. There you go. It's only happened 13 times past 11 years. Really tough to read into. However, I will say it does sort of fit with the logic that I was thinking that it may, in that it does have a short bias. Shorting up gaps historically has done well. Buying down gaps has not. So why exactly is that? Well, a 10-day high close that doesn't also put in a 10-day high tells you that you're testing the recent highs. So there's been other days, and it's just less. It just doesn't have that strong, straightforward momentum through the key level. It stalled out at this level once before, may stall out again. That's sort of the way I think about it. So, and this certainly seems to substantiate it. Be careful with buying a down gap. Shorting an up gap may be okay. And as always, our members will defer to the gap guides and the other information shown in our worksheet. But I thought this was an interesting nugget and would at least get you thinking a little bit over the holiday. All right, so let's take a look at what the worksheet showed today, which is just the summation of individual gap guides. And the markets gap down around prior lows. Some were just between the close and the low. Some were below the lows. And in fact, the ES thing up in one tick below. It wasn't a terrible setup opening between the close and the low. In fact, that was for most indices, that was the UOL zone, and it had pretty mixed data. Some of it was DCL though. Different closing directions give the different directions. It made a little bit of a difficult trade to analyze. But nothing was compelling, so I wasn't too worried about that. See, down gaps after dojis during bullish markets have been problematic. Down gaps after an inverted hammer, problematic. In fact, I'll just show you specifically the gap guides. Yeah, let me do that. That make up that worksheet. You see, we opened in this zone here, the blood zone, by one tick, right? Because we opened at 1600. But the one above was a 50-50 kind of zone. DCL zone, because it closed down, had that doji yesterday, was okay for the YM. UOL for the NASDAQ was okay. I almost met my criteria, actually. And then the Russell was, UOL is a little bit weak. And the ETFs look similar. So just sort of mixed kind of data. Easy for me to pass on. That's what I basically said here. And I have some additional considerations that showed down gaps were weak here as well. So, no opening trade for me with all this weak data, mostly weak data for down gaps. But as I said, there's always a decent probability of filling today's gaps. That's the whole reason we trade gaps. They have a huge bias for filling. It's just that history does not show a compelling profit expectancy for fading the open using a reasonable size stop today. So, I passed on it, and after testing the open, which I talked about in our trading room, this is going to be a key inflection area. We're likely to have a nice rally or a nice sell-off from here, even on a short day, because the pressures were building on a number of levels, and sure enough, it bounced. I didn't trade in any way. The 15-minute nor the first-hour range levels, which are the gold levels versus the pink levels, showed any clear edge, so I did no trades whatsoever. I was going to fade the fill, which can't tell if it would have worked or not. It would have been very close, where I was going to go for +2 and +5, maybe hold some, but only if it did it before 11, as I explained in the trading room. It happened later. Now, this time it actually broke through at noon, but just a different setup, different environment altogether. So than it has been the past couple days. So another quiet day for me, and there you go. That is the wrap for Wednesday, July 3rd. Have a fantastic Independence Day. Take care.